Welcome to RANsquawk's EU morning briefing for Monday the 20th of July 2009. We've just gone through 8:30 now in London to take in a recap of the weekend's press and also what to expect for the rest of today's session. Obviously in Japan or in Asia in general, volumes have been down with the Japanese Marine Day holiday. We have a couple of pieces to note over the weekend's press, most notably for CIT Group, which has been one of the main focus points of last week, having seen one of the largest lenders in America potentially looking to go into bankruptcy. However, Wall Street Journal reports that CIT Group has cut a deal with its key bondholders for $3 billion in financing, and that will help them avoid bankruptcy filing, and they look to restructure outside court. That could well be met positively when the US start to come in a bit later on this morning. Indeed, we have seen some risk appetite pick up in the FX markets. The dollar index is trading down at the moment around 0.2%, with euro dollar and cable already higher at the moment, just through 8:30. Elsewhere, a couple of comments from the US. White House's Summers says unemployment likely to rise in the coming months. And also, Peter Orszag, the White House budget director, says that US GDP figures are likely to be better in Q2 than the first quarter, showing signs of improvement in the economy. Elsewhere, sticking with the US's recession's grip on the economy appears to be easing, but likely has not yet ended, according to the NABE, that's the National Association for Business Economics, in their latest survey. The actual index print there came out at -5 in the second quarter against the Q1 print of -14. And also from the Journal, demand for the Federal Reserve's emergency short-term lending is abating, the latest sign that credit markets are healing. However, the Journal, in its opinion, writes that although credit market conditions are improving, they aren't and may not for a long time go back to pre-crisis levels. Taking a look elsewhere in the UK markets, much of the main focus there coming out of the latest Ernst & Young Item Club reports. In particular, one of the key headlines that they run with a lot of focus at the moment with the escalation of the swine flu in the UK. Ernst & Young Item Club reports that the swine flu could cause the economy to contract to a massive 7.5% in 2009, therefore dash any hopes of an early recovery. However, in terms of their actual predictions, Item predicts a 4.4% slump in the economy this year, which would be the biggest fall in a single year since 1945. Then they see a modest recovery of 0.5% for 2010, followed by 2% growth in 2011. In terms of interest rates, they see that they will stay below 3% until late 2011. And for unemployment, they're slightly more optimistic. They see it peaking at 2.76 million next year compared to 2.38 at the moment. That's 2.76, obviously a bit lower than the 3 million a lot of economists and papers have been writing about in recent weeks. Take a look then in the equity markets. Obviously that CIT Group story will obviously be one of the main things for the US players. However, in the FTSE 100 for GlaxoSmithKline, some positive news out the Sunday Telegraph. They reported that Glaxo is in line to receive a £1.3 billion boost from global swine flu pandemic sales. For Lloyds Banking Group and also RBS, some pretty positive news for them as well coming out of the Sunday Times. Lloyds, as reported by the paper, could shock the market with its first half results by announcing that accounting trickery has helped it scrape into the black, despite that enormous bad debt provision which stands at around £13 billion according to most analysts. The bank is likely to post a modest headline profit for the first 6 months of the year, with a similar story as well from the Express for RBS, saying that they're set to bounce back into black by posting an estimated first half profit of more than £1.5 billion worth. Those are other notable news for Porsche and VW. VW shares in the last 5 minutes, they are down around 10% in the DAX index at the moment. Porsche's controlling families will agree on Thursday to accept an offer by VW to buy its sports car business Porsche for roughly €8 billion worth, according to weekend articles. And also something worth noting, although no longer a DAX constituent, the German property giant Hypo Real Estate may need to get a further €10 billion in fresh capital from the German state in order to stay afloat, according to the chairman of the oversight board. At the moment, in terms of the FTSE CAC and DAX, we are trading up around 1 to 1.25% at the moment. In particular, some of the basic material stocks performing well. In terms of WTI crude futures, we are trading up just shy of $1 at the moment, around the 64.50 mark at the session high. So in terms of today's calendar, it is pretty quiet. The UK data we'll see will be for money supply at 9:30. No major 130s from the US. It will just be Canadian wholesale sales and then leading indicators for the month of June. That'll be at 3 o'clock London time. In terms of fixed income, we'll just be eyeing the Bank of England's reverse auction. They'll be targeting the 10 to 25 year basket. Usual time results there around 2:45 to 3 o'clock. And then also we'll be keeping an eye on this week. Obviously the main US earnings season really picks up a bit of pace. I believe it's around 155 S&P 500 companies reporting. Today we'll be looking pre-market for Halliburton and then Texas Instruments and Boston Scientific due to report after market close today.